Hello everyone, Happy New Year. Hope 2024 is starting out well for you. I'm going to speak about Bitcoin today and go through where we're at. We got a lot of potential opportunity, good volatility to start the year. I'm John Slazas from Dharma Capital Trading. You can follow me on X, YouTube, and Substack, and reach out to me directly at info@dharmacapital.trade if you have any questions. Before we get into it, I want to go through a disclosure. All the information we present today is for educational purposes only and should not be considered specific investment advice nor recommendations. Cryptocurrencies, futures, options, forex, and stock trading contain substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's own financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Dharma Capital Trading is a proprietary trading and research company, and we're all about quantitative, fact-based trading. And fact-based trading involves making decisions based on objective data and analysis, reducing speculation and subjective biases. And the resources that we use are our analytics to standardize our decisions, applications to normalize those analytics into the workflow, and we work with traders in developing them to optimize their tactics with our analytics. Our method is consistent, and it's the same across all time frames and asset classes. What we do is we identify the context, basically define the state characteristics, what's that environment, and then we define the alignment. We identify the structure points of those state characteristics. So where are the inflection points where the state will change? When will characteristics change or persist? Those are the inflection points that we identify with our market structure, and that gives us our expectation, which we put into an if-then statement of what is more likely to occur. To learn more about what we offer, you can go to dharmacapital.trade, take a test drive of our analytics and our applications. So we're going to talk about structure today, something arranged in a definite pattern of organization. And we're going to go over the price structure of Bitcoin, the time frame structure, and market structure. So the common perception of price structure, we've got market price action, and we identify these price swings, and we're looking for the market to maintain some type of trend or not. We're going to look for higher lows, higher highs for positive, lower highs, lower lows for negative trending environments. One thing about price structure, though, is we after you move away from just identifying these peaks and troughs, as we start to get into more subjective analysis, more technical analysis, and you're starting to draw trend lines and things of that nature which are not factual. It is factual when the market makes a low and a higher move high. That's a fact. People are going to have different perception and insight, and that's going to be something more subjective. And we try to stay away from subjective studies and focus on the facts. So identifying trending higher high, higher low, lower high, lower low. Price structure is a valid objective tool, especially on higher time frames. But when you incorporate technical analysis, it reduces the validity by overlaying subjectivity, which can curve fit, and it can be curve fitted to your cognitive bias. So that can become an issue. It's not scalable. So the next thing we're going to, so as you move up the food chain of value in structure in the market, time frame structure defines the parameters of the trade period, which align with fund managers' benchmarks. And so what we're basically just looking at is, the high, low, last, and midpoint of whatever that defined trade period is. Is it a daily, weekly, monthly, quarterly, yearly time frame example? This structure become benchmarks. And so if we look at monthly time frames, the previous monthly high, previous monthly close, low and midpoint, this is a great benchmark for fund managers because they're mark to market, and every month on their performance, how did they do based the previous month's close. So these become really valid time frame structure. So time frame structure provides insight to anticipate opportunity and proactively manage risk by observing price movement across various time frames. So what is market structure? Market structure defines the alignment of the state condition. So market structure versus price structure. So price structure, again, we're identifying the peaks and troughs. Is the market maintaining negative price structure, lower highs, lower lows? Market structure is going to identify the context. So we're going to identify the market state. In this example, we're identifying a neutral digestive state. And then we're going to define the price points that define this state. So where is this state in neutral? So markets are always transitioning from one state to the next, and we are identifying these structure points where the market's making a decision to transition or not. So as long as the market is within these boundaries, we know we can have higher probability that the market's going to perform to the expectation of a neutral digestive state. Once we move outside these boundaries, this tells us that the characteristics of this state is changing and we're in a state of transition. And typically a market in a neutral digestive state, when it transitions, a lot of times it's either going to give you a false move and expand this digestive range, or you're going to get a sharp breakout. So those are the characteristics of a neutral state that transitions. And so being aware of what the state context is and when and where we get a shift, you can align your tactics. So market structure is not support and resistance levels. What it is market structure is the technical alignment of the market state. We call our proprietary market structure analytics the price map. This is from a legacy JS Services, a 35-year-old research and trading company based out of Chicago. The price map structure analytics identify the alignment where shifts in state occur. This provides a framework to standardize trading tactics with the best risk-defined opportunities. Before we get into our outlook, we're going to go into little definitions of all of our qualifiers so you can follow along. And our market structure foundations are really based off of 3 price points. What we call our sentiment bias. This is the point of dynamic equilibrium for any time frame. We call it our R level, reversal level. And a critical range with an upside pivot and downside pivot, kind of a containment zone with a directional midpoint, kind of a rotational number within that critical range. And so these 3 price points define the state conditions. So in this example, we've got a market in neutral digestion. Sentiment in this position is balanced. Sentiment may be above the critical range, might be at one of the critical range parameters. Sentiment is bias can basically move around the structure. It's not the hard structure. The hard structure is the critical range, and that's always the same. And so a market is either going to hold structure and perform to the expectations of the state. So in neutral digestions, it's going to trade sideways. Or it's going to transition and break structure. And when we get a break out, that's what it'll do. It'll break out and transition. We're not sure what type of a state it's going to transition into, but we know it's no longer, the expectation is no longer that it's going sideways. So we need to change our tactics. And sentiment bias will skew the state characteristics. So when sentiment is in alignment with the characteristics, so for example, in a bull trend, market making higher move highs, higher move lows, and sentiments below the market, that just tells us that sentiment is in agreement with the state characteristics. It's a positive trend. We're expecting a positive movement. When sentiment's above the market and we have negative sentiment for a bull trend, it's just identifying the potential for a correction. So we're in more of a pullback. Bull trends don't go linear, and the expectation here with sentiment above the market would be that, okay, we're in potentially for a corrective part of the bull trend. So again, sentiment bias, over under number, any time frame. This is a weekly example. This is current. This is this week. The first week of the year, we had our fake news come out, came down to our sentiment bias which is at the downside pivot, and we have our critical range defined by the upside pivot, downside pivot, and our directional rotational momentum level within that critical range. We also have validation points, and these are the price points that validate movement within the critical range or when you get outside it, so to validate a breakout. And then once we do get a breakout, we have target levels, and we'll typically have 4 target levels. One thing the price map structure does, it helps to identify segment moves. So typically on a trend or a breakout move, we're looking for a 2-segment move. So this would be 1 segment, 2 segment. And here we have a reversal signal, 1 segment, 2 segment, and then another reversal signal, 1 segment, 2 segment. So it helps to give you a sense of the value of opportunities. And the basis of our method is to provide a statistical baseline, an outside view. And this helps to slow down the decision-making process to minimize those cognitive biases. And this really is validated through Nobel Prize winner Daniel Kahneman in his book, Thinking Fast and Slow, quotes, "The outside view offers more accurate predictions than the inside view." You know, we all live our lives making decisions intuitively. You know, do this, do that, yes, no. And we don't always take the time to go through and contemplate some of those actions. You know, we do when there's, you know, especially when there's math involved, we do slow down. We do start to think. We do start to process it. And so in trading, it can be dangerous because you can get anchored on different biases. You know, you might read some news that anchors you on, you know, the Bitcoin's going up or Bitcoin's going down, or you just had a big bill come in and it's going to enhance your fear. You know, because you know you need to, you know, get some money organized to do something. You know, whatever it is, slowing down the decision-making process and making it more methodical is going to give you more of an objective decision, and it's going to improve your clarity and the sustainability of your trading. All right, so let's get into it. So here we're looking at Bitcoin for the past few years. I'm going to put on, you know, we can see, you know, just looking at our price structure, you know, one of the key points of price structure is here. So the market, you know, as it's making its higher high, this low is important. And so when we take out that low, it's a negative signal. And it's typically a signal the market's going to start to trend lower, or we're going to have sideways. And for Bitcoin, we went sideways. So this high point here is a key inflection point. So this was, you know, really when the market broke out above 32,000, basically, it told us here, based on price structure, that things were changing. So the next thing I'm going to add the previous year structure. And so here we have our previous year's low, previous year's high, previous year's close, and previous year's midpoint. So what's happened this year is that the market has closed near its previous year high point. And so typically when the market does this, it's usually either you've had this blow-off move into the end of the time frame. And this could be any time frame. It could be a daily time frame, weekly time frame, monthly, it doesn't matter. You'll see the market is either ready for an explosive extension because it's so big, it's closing at the high end of the period, or this becomes the high area, and we'll see a pullback down to, let's say, the previous year midpoint, which is in alignment with this 32,000 level, which is the breakout point. So this would be kind of a natural price structure and time frame structure that are in alignment. And so the sentiment bias for the year is coming in at 37,360. So this is our key inflection point for the year. Expectation is that, you know, if the market is this good, it should maintain a trade above this price point. Our critical range parameters for containment are 53,000 to the upside basically, and the 25,000 strike to the downside. And then I'm going to add our validation points. And so we have our lower validation points. So basically, as long as we, if the market does fail from 37, the 37,000 strike down to, let's say, 31, we've got this good alignment here at the 31,000 strike that comes in line. This is the validation point for a lower extension. And so as long as the market holds this area, everything's all good. And same with the upside, we've got this confluence at this, the 45,500 strike area where you've got the previous year's high point coming into play with this major structure. So I'm going to start to dial in here into the quarter and what's going on. So this is just kind of a big general overview for the year right now. All right, so I just dialed things in. I'm going to add the previous quarter parameters here. And so we can see that we've got our previous quarter high, previous quarter low, previous quarter close, and the previous quarter midpoint. So what's happened, right from the get-go, what did the market do? It made a new quarter high, just like it made a new year high, basically, because this is basically the high of the year. And so, what does that tell us? We've got, a higher move high. We made a new move high, so it's positive. So even if we get a corrective dip, end story, we've made a positive new high. We can see how, we had our event the other day, and now the market's back above the previous quarter close, which is key. So, basically net change for the year is big. As long as we're net change positive for the year, things look good. We go net change negative on the year, there's an issue. So let's add our market structure analytics. So we'll put our sentiment bias on for the quarter. So sentiment is way below the market at 29,000 basically. So this is the sweet spot. This is where the real buying energy is way below the market. This is the inflection point that keeps this an opportunity, a buying opportunity for the quarter, for Q1. And we'll put on the critical range. Let me adjust this down here a little bit. Just wanted to get a sense of where things are at. So here we have our critical range. The upside containment is, basically, just the 48,000 strike. We have, the downside pivot is basically at the 33,000 strike, and you can look at this whole zone as basically a support area, or this is the lower structure band, this whole area here. And you can see that within that zone we have that key inflection point where the market broke out of. If we do get a corrective move, this is, where can it go? Pull back to where it broke out of. Makes sense. It also is in alignment with structure for the quarter, so that's also key. Our event stabilized, off the directional, and so these are our metric boundaries. So these are the area of influence around these inflection points. And so the idea with using market structure is to keep your signal acceptance and your trading execution within these boundaries, so you can really define your risk, which would be through the boundaries. And so again, as long as we're above this previous quarter close, things are looking positive. I'm going to add the validation points, which is, turns out that the 43,637, we call this critical range positive. Again, another qualifier term, but basically it's a validation point within the interior of the critical range. Is kind of working right now as a rotational number between the previous quarter high and previous quarter close. So those are key points. So the market has already validated higher, we had the squeeze, and now we're sitting here. So it's, it's kind of winding up within this zone. Is this over? Tomorrow we got employment numbers coming out, so we could get some clarity tomorrow if this is really true and we're going to have a further corrective action and the retest of this area, or are we going to stabilize above 44K and make a play for the upside pivot. And then if we take a look at the what if situation, what if this market does break out, where can it go? What are the expectations? We know on the downside, the expectation is if we're getting a failure, that we can see the market come back down to 32K, maybe back down to 30,000 on a squeeze. It's all good. I mean, basically, this is your big buy zone. So if you're looking, when I look at holding a position in digital assets and crypto, I'm saying, okay, I want to accumulate. Where's the optimal place to accumulate? This is the optimal place to accumulate. Okay, so when you're dealing with your size management, this is where your big size is. So if you're going to leverage into this opportunity, I believe in this. Are we going to get approval or not? Who knows? Bottom line, do you believe in the space? At some point, we're moving forward. Are they going to wait till after elections? Who knows? I've been trading for a while, and back in the late 80s, when Globex came on the mercantile exchange floor, all of a sudden we're transitioning to electronic trading, and I thought, oh, this is going to take over the world, and it did. It took 10, 12 years to do so, and so we definitely made some bets at that time to get involved in that space, and it took some time. It took some time, and we're in the same situation. So it's inevitable. When's it going to happen? We don't know. So anytime you're putting anything on, this is an opportunity to scale into an opportunity, but your accumulation zone is here. If the market is really great and it's going to go, it should stable above the directional. This would change the whole tone of the quarter. If we get a failure from basically the 39,000 level, that would tell us we're more sideways corrective. Is it going to be an event capitulation and happen in a day with a big V bounce? Possibly. Could it contain the market for a while? Yes, at least through the quarter. So the directional is a key pivotal point. Why? Because that is the rotation number within the critical range. So if we do validate up and we make a play here and we get this upside event, where can it go? Well, I was talking about segment moves. So a typical segment, 2 segment move would put us up at 55K. And once we get outside the critical range, that's a fresh buy signal. So this is a fresh positive if we start trading above 48K, and that gives us another 2 segment opportunity. So it brings us up to 62. And that's based on the quarterly structure. So this structure is going to last through the quarter. So let's keep dialing in, and let's take a look at the monthly structure. So I shifted down to a 30-minute chart. And as a reference point, that's our breakout point that we identified before. So let's put the time frame structure here. Basically price structure has been real sideways. Obviously, we're all waiting for this event to happen. We're going to get something to happen or not. Taking a look at the start of the month, what happened. So this is pretty classic. We start the month, we're above the close, so we're above the previous month's close, end of the year, and immediately we're stabilizing above it. Where can it go if it rallies higher? We can go to the previous month high, which we did, and we took it out. So this was a big deal, and you can see how it started to stabilize here. And no, it wasn't ready to go. And we get a reversal here, and we fall back. Where can it go? Go back to the midpoint or the previous month low, and we basically get a capitulation off the previous month midpoint. Here we get a retest of the previous month high. This is just classic digestive consolidation. The fact that the market rejected here, it's putting more value on this basically the 45K area, or this is 44,800. Again, you can see that how the market just retested the previous month close, so a net change positive on the month, positive quarter on the year. This is a dynamic point. And that's where we are right now. And let's take a look at the sentiment bias for the month. So this is for January. So January sentiment bias is below the market. We add our metric boundaries, and we can see that the monthly sentiment bias is coming in also around the price inflection point that we identified is the kind of the breakout, that 32,500 area. And so let's put the critical range on. So in this situation, sentiment is way below the critical range. And so this happens when the market gets really excited and is making a big trend move. But what everyone needs to understand is that the sentiment bias is where the liquidity is. And so a lot of times it can act like a magnet. So if we get a failure here in January below 41K, the market's going to want to go here. And we've already looked at the alignment on the longer term time frames that a lot of things are coming into this area. So that's always something to consider. Now, the previous month low is a big deal because that keeps the whole bull idea in play. Everyone's very positive right now on the market. And if we're going to have a positive trend, what should happen? Well, it should make higher lows. It should make higher highs, higher lows. So 37,500 is basically the previous month low. It should stabilize above this area. And that comes into alignment with the downside pivot kind of zone. So that's something to consider. So what do we have going on currently? We have a market that broke out of the critical range to the upside basis the month. And it failed. So we have a false breakout. We call that a reversal. And this is a strategy that you want to use to reduce your profit give back. So anytime a market breaks out of a range and it should go and it doesn't, anytime I get a breakout here, you want to adjust your profit give back up aggressively, because if the market should just basically climb this ladder. And if it can't climb the ladder and it can't maintain positive price structure and market structure, there's a problem because it's not performing to its expectation. And so this is a risk management opportunity here. And on the accumulation side, it's similar. It's just flipped. So on the accumulation side, we know we want to be a buyer down here, or maybe get a capitulation off of this area. But we don't. We don't get it it doesn't go that far. But what it does do, it gives us the opposite. It gets a reversal off the directional. So we go below the midpoint, which is a good momentum level. And so we have this when we're below here, this is very negative. And we can't sustain that negativeness. We can't. What should happen is the market should bounce up and not be able to get back above this 42K level, and it does. And so this is a positive reversal. And then here you see it provided that one segment move back up to the upside pivot, and that's how the structure works. So let me add the validation points. And so when we got the failure from the directional in the month, it couldn't validate below the basically 40K. And so that's what how these validation points work. We get a breakout below the directional. The expectation is going to come here, and this is money. I mean, a break below 41K, down to $4,000, $1,000. It depends on your trading style, but there's opportunity there. There's opportunity for these half segment moves, and you can see how the market made a half segment move, pulled back a half segment moves, stabilized, and turned into a full segment move. That's the just identifying the natural flow of the market is what the price map is doing, and those are the segments. That's what the market's paying out. So when you get into an opportunity, the price map's going to identify what the opportunity is, what's the market segments that it's trading in. And that's kind of dependent on the volatility. But you can see here the market was unable to validate a breakout to the downside. So the market trading back under 39,500, it's basically saying, hey, this positive momentum is over. We broke below the directional and it validated. It's done. Now we're kind of flipping the switch and we're saying, okay, now we're going to, if the market trades down here and you pull back here, we're selling with the expectation the market's going to try to make a play here. So it didn't do that. So now we're in on holding pattern right now, coming into the figures tomorrow. So let's throw up the major levels and just kind of see what if for the month, because we could see some of these monthly targets happen tomorrow. Just to get the market, if it gets excited or we get a news event that comes out. And so coming into tomorrow, we can even dial in further and take a look at the weekly structure, and then we'll go into the daily, which is you just go in from the macro time frames into the micro, and then how are the micro time frames interacting with the macro time frames. So let's dial into the weekly structure. So we're coming into Friday. Saturday is the end of the week. The settlement for crypto is on Saturday, and the new week starts on Sunday, which is UTC time, so it's actually Saturday night. So this structure has been in play all week. So let's put up the previous week structure here. So we can see here that the market, opening up, it's kind of ping-ponging within the previous week's midpoint and previous week's close. So that, this is good digestive action, and then you can see it starts to stabilize here. We're going to go into the previous week high, takes it out, we get a breakout, failure back on through it. Where can it go? Previous week's low takes that out. It's getting kind of messy. Let's take a look at the weekly sentiment bias. And so this all along was the optimal area for this week to get involved in accumulating. So this is accumulation strategies here, and this would be an ideal one actually, because when we get any kind of corrective action, and when we take a look at the critical range here, we can see that this was a breakout to the upside, and then this is our reversal. So we talked about breaking out of the critical range and protecting your profit give back. This is a profit give back signal. Where can it go? It can go here. And we're not going to catch a falling knife. We're going to let the market tell us when we want to get involved. And so the market takes this out. If we go into a smaller time frame here, we could see there was trading here. It wasn't just a one bar. And it provides an opportunity to accumulate, off the sentiment bias for the week. So I'm going to put the target levels on here. So basically the way this reads for the week is the market, opens up around the directional, it's churning, you see the metric boundaries containing it, and whenever you get confluence here, it's a sign, that's a good sign that you have alignment with structure. Again, this is all basically quantitative, this is all factual. There's no subjectivity in this analytics. And the market makes its move. We break out of the critical range and we attain our target. So this breakout here, a 2-segment move is accomplished. And whenever you get a 2-segment move quickly, it sets up a situation like this where you get a pause. Let me put our validation points in here. And this is a good example where the market breaks out to the upside, and whenever you have a fast 2-segment move, under normal conditions, you're going to get some kind of pause or a pullback. And so this market couldn't pull back to the upside pivot, and then it stabilizes here and it takes out these highs. This is classic crypto right here. This is a positive signal based on structure. Price structure wise, the market is taking out this structure. So a lot of people are getting really excited here. When we talked about risk management, this is a risk management situation where you have a market you coming into here, 2 segments, we're going to fading momentum. It's normal for this market to take a little breath, take a pause. What are you at risk for? Well, we're at risk for a 2,000 point break, at least 1 segment move. Market can't even do it. Okay, now it starts to hold here. It's getting it's going to ramp back up. When it gives you this signal here, that's the time to adjust your risk management. That's where you really adjust your profit give back. And so, and we had that exhaustive move here, and we basically had a breakout to the upside, a move into sentiment. So we've had 2 major moves. Now the market broke out, was working back above the previous week's high, and then we've just broken that structure. So this is significant. So basically, if the market tests sentiment, it should hold positive price structure. This thing should just go. You had the nice big squeeze, you tested sentiment for the week, and it should just run. We should basically make a move up to the UT2, which is at basically 48K. and we're breaking structure currently. And we broke structure, we moved back to the directional, and we stabilized above the previous week's close. So we're basically winding up for tomorrow's figures is what's happening. All right, just for fun, let's dial into for tomorrow. Let's see what's going on. Let's look at the daily structure. All right, so I dialed back into a 5-minute chart here, and you can see we've had, here's our price structure, working nice positive price structure, and then all of a sudden we break that price structure and we get this failure here. So let's put on the previous trading session what's happening there. So we have market basically opened up at the obviously it opens up at the close, and then we take out the midpoint. We immediately test the previous day's low, take it out by a little bit, and we're still trading currently below the previous day's midpoint. So before I go into the putting on the R level and the rest of the price map, I want to introduce our playbook. And this is what we have for the daily structure. So I'll quickly go through this. This is our web service playbook, and what we're doing here, it's basically it's literally a book. You're on the sidelines for trading, and you're coming into the day, and this is basically, here's what you do. Here's our if-thens. So basically, we start out with that foundation, that contextual foundation, which is the state, and so we've color-coded the different types of states. So blue is a bull trend, red is a bear trend. Here's an accelerating bear trend. Here's a bull trend correction, a bull trend acceleration. Bull trend digestions. When you're in a bull trend, you've got the market just doesn't trend or non-trend, and it also has extreme situations. So a bull trend is typical. Bull trend is markets making higher move highs, higher move lows. Well, we also have markets that are correcting in a bull trend, and so the market's still in a bull trend, but it's correcting. So we need to change our tactics. And so your tactics might work better in a corrective state. I love corrective states because this, especially if I'm looking for these capitulations. I'm looking for markets in a corrective thing. If I can participate in that capitulation, I might have just bought the low for the next extension higher of a trending market. So corrective states are fantastic. So are accelerating negative states. A lot of times, those will turn out to be the lows. You come in and the market will be really pressed, and you can really, especially when sentiment is balanced, it basically gives you an opportunity potential, to catch a move, counter hedge move. And so there's lots of different, ways to, take advantage of markets instead of just looking at, hey, I just trade Bitcoin or Ether, or I just trade the S&P. Trade a market state. I like to trade a market state. And so what we do is we define that state context. And if any market's in a bull trend is going to have the same context. A bull trend's a bull trend. Again, we're just presenting the facts. What the volatility expectations are, what the momentum expectations are, what the bias is, what the trend type is. And then what we do is we identify the structure. And so for Bitcoin today, for the daily structure, sentiment is off the downside pivot. And so let me adjust this screen here. There we go. So what we're doing here is, we've identified Bitcoin's in a bull trend. And where's the structure? Well, structure is coming in off the downside pivot. So here's our R level. So let's put the R level on the daily here. And so we can see that the R level is in alignment, just above the previous day's low point. And so this is unique structure. And, basically these commentaries are going to tell you, hey, because the market is at the sentiment's at the downside pivot, we're in this specific regime, this is how that's going to skew the state. And typically, what do we know about this state? Well, we know that if sentiment's at the downside pivot, it's making the bottom of the critical range even stronger. It's saying that this is a real good value area. And we also know that that's the expected low point if the market's going to be in a positive trend today. So it really gives us a nice definition there. And then on the playbook, we're also defining those metrics I mentioned. So the segment moves. So today we call it an average price map distance. A one segment move is basically $1,100 for Bitcoin. Bitcoin's trading in $1,100 segments. That's what it's paying out today. So half segment move, it's basically $550. So the minimum you're going for is $550 because it wants to pay you $1,100, if not double that. And so then we also provide the risk metrics as well. So since we understand, so it's a playbook. So we're in this state, we're in this structure. What do? It's if then. These are our optimal strategy themes. Optimal thing to do is to buy our fade momentum off this structure. What's the so now let's add the critical range here so we can see everything that's going on. Let me enhance that a little bit. So again, in our this is our strategy themes, and the optimal thing to do when the market's in a bull trend, with sentiment at the downside pivot, is we buy breaks above the downside pivot, and if we get that opportunity, we leverage that up with buying a breakout above the directional. So basically, what should happen is the market, expectations to stabilize above the downside pivot, and then if it does, and we get a breakout above the directional, and tomorrow, the previous day's close is basically just near the upper metric boundary. Ideally, they're in alignment. You can see the lower metric boundary is coming in with the previous day's midpoint, so this is a good momentum level as well. So this whole zone is kind of a natural directional momentum area for tomorrow. Between basically 44,200 and let's just call it 43,800. This whole zone is your dynamic momentum area. So is this true? The market tested sentiment. It should just go and it should build positive price structure and climb this ladder. Let's put our validation points on. And again, this is the power of the price map. So what happened here is you had a breakout below. This is a reversal, and the market couldn't validate below we call this our CRX minus, the critical range negative extreme. Again, we have acronyms. You just take a little time to understand them, and then it's like riding a bike, and you can literally take this structure into any time frame, any asset class. If we're looking at we have a futures dashboard, we have a stock dashboard, we have an ETF dashboard. So it's all the same stuff. It's unified across time frames and asset classes. So back to our strategy themes. That's what we want to do optimally. Optimally, that's the play, right? So as the market's performed to expectation, it tried to press it, gave us a reversal signal. It should have really just faded in here. That would have been a stronger signal, but right now it's okay. It didn't validate. So the fact that this was kind of a head fake, it should just go, and we should get that breakout here, and we should rally. So what happens if we transition into a hedge state theme? So basically, if it can't hold structure, and if it can't maintain base basically above the 43,000 strike, and we break structure below that, that's going to tell us that the market's in a transition for the session. Again, this is daily structure. And so that will kick in a hedge theme, and that tells us that, stop hoping, for a bull trend to ramp up for Friday, as we could have kind of that things could potentially get crushed. So now we've identified that, hey, yes, the market didn't validate. If we do validate, and let's put the some major levels on here. I like to go 2 segments out, just kind of a view. So basically we've got our previous day's low point. So if the market, the market should stabilize above this 43,400 level, this CRX, the critical range negative, the interior validation point. It should stabilize it like it's doing. Blow that up a little bit. And start to climb the market structure ladder. Just as you want to see positive price structure, we want to see positive time frame structure, and now we want to see positive market structure. So we want to see it start to climb this and start to base above here, and that'll be the tell that we could see a move. And from a sentiment bias move, you're at least looking for 2 segments, if not 3 or 4. That just is what it is. That these are your bigger bets because they have bigger opportunity. If the market breaks structure and we start trading below this, 43,410, absolutely we're looking for the expectations that the market's going to at least retest this, possibly just kind of is a signal that we're going sideways and it's going to be a real boring day going into the weekend. But if we're not able to hold above 42,800 and then we get a failure here back below 42,400, there's a problem. There's a big problem, and so we could easily see a move down to 40. Even the 40K strike. And this is when we start to look at the higher time frames too. So now we're going to go backwards, and we'll just kind of tee up and end off with kind of the quarterly structure of what we got going on. So let's just as we're on the day, let's throw some of the long-term stuff on. Okay, so I cleaned this up. It gets a little messy when you start to overlay things, so just bear with me on that. But so let's just take a look at the weekly. So weekly sentiments below the market. So this is always nice to look at. Kind of comparing the different time frame sentiment biases to each other. When they're all in alignment and prices above them all, it is what it is. It's positive. So that's a key figure. Let's put the weekly critical range on. See how that starts to match up. So basically, again, everything's, it's an onion, right? So you got, the daily within the weekly, within the monthly, within the quarterly, within the yearly. That's just is what it is, right? So when you see a situation like this, and we have our CRX minus in alignment with the weekly DIR, that's great alignment. And so that's something to be aware of. And if you aren't aware of it, you miss that opportunity. But when you come in here and you say, oh, the R level is at 42,800, and you're getting nervous because it starts to take it out. Well, this tells you, yes, you do have the validation point, definitely needs to validate. But then when you see that the weekly directional is right below you, it's something to respect. And on the upside, we've got our the directional area. Let me put back the previous session. Basically the top of the previous day's close is in alignment with the weekly upside pivot, and then the other good alignment that we have currently is the daily upside pivot is in alignment with the weekly CR plus at 45,000. I'm going to take off the daily. Okay, so I backed out of the, just kind of moving back to higher time frames. So we're just looking at the weekly structure, so what we've done through the week. And let's put the monthly critical range on here. See how that matches up. And so, we're getting a lot of confluence up here. And that is in alignment with the weekly CRX. So, basically, on the upside, on a positive push, what's the big hurdle? It's coming in here at 45,200 area. So I'm going to move the playbook now because we're going up to higher time frames. But this is a tool that we have, an application that you can test drive on your own. All right, so I backed out. We're going to wrap this up. I took you down the rabbit hole. Now I'm bringing you back out. I'm going to clarify things. So, basically I wanted to show you that the structure works on all time frames. It's the same method. What's your duration? What's your time frame? If you're day trading, hey, you want the daily structure and the weekly structure. If you are more of a swing trader, yeah, you're going to focus on the weekly structure and look at the daily and the monthly. Kind of use the daily as a trigger. If you are an investor and you're looking to accumulate and you're looking to protect profit give back, well, absolutely you should know what the monthly and quarterly structure is. So you can make your decisions. And then when it comes down to execute, that's when you got to go into shorter time frames. It really helps to optimize things. So I want to show you that, and so let's just kind of wrap this up and what's happening for the quarter. Where are we at? We got a lot of big things happening. So It's pretty straightforward right now with the previous quarter high and previous quarter close. We also saw a lot of different alignment coming in around 45,200 area. So we can kind of basically just use the 45,000 strike as your trigger to the upside. The market told us it wants to go higher. So if it starts trading back above there, this signal here says we're trending higher. We're making higher highs. So the expectation is to kind of come up to initially to come up to this 48,000 strike, and the containment, the validation point is up here basically at 52,000. And that really tells the whole story. Are we really going to have an upside breakout in Bitcoin? The 52,000 is kind of the initial exhaustive move. And then if we did get above there, just to give us some other numbers to look at, to consider for profit give back adjustments is, moving from the directional two segments is 55K, and a two segment move from the critical range breakout is basically 62K on the upside. And that's triggered here. And we saw that the market really should be basing above 43,637, the quarterly CR plus. Now on the downside, the market came down and retested the this 42K area. That is the current base. So if the market's going to start basing and build positive structure, it should maintain a trade above 42K. And if it can't, it's a signal that we're going sideways. So the market tried to press it to the upside, kind of landed in no man's zone, failed back down through, tested the directional. What's more likely to occur if we start trading at below 42K is we're going to retest 40,000 and retest the quarterly directional area here. And the market, this is, we've got these price structure lows here too. People, we're gonna have some stops below here, so taking those stops out and stabilizing above it. I love those setups with structure. So price structure is the weakest one, time frame structure is next, and market structure trumps them all. And so you've got, this is where having a situation where you get price structure basing above market structure. A lot of times you'll get the failure below the price structure into market structure, and it's an opportunity. So that's something to look for if that happens. So this is where you really want to maintain focus and even dial into the shorter time frames. And if we can't hold above 39K, we're vulnerable. This is where you need to hedge, you need to protect yourself, because we could easily see a drop down to 33K, if not back down to 30K. Again, that is, I left that marker on there of the price structure breakout point, and that is kind of a typical natural pullback. So whenever you break out of a major point there, which they did, what's the natural pullback point? Come back to the breakout point. And so that would be, that's where that would happen. And so tomorrow's a big day. We could see a breakout of this range. And, if we don't, even more consolidation through the weekend, maybe something happen on Sunday as we get new weekly structure. So on Sundays, we do publish our weekly outlook on Substack. So you can sign up and get that outlook to keep up to date. Also follow me on X at DharmaCap Trading, and continue to check out our YouTube channel. So if you enjoyed that, click like. Share it with people you think would appreciate it. If we provide you some clarity, like to hear about it and interact. Give you some updates. Any questions? Feel free to DM me and send me an email at info@dharmacapitaltrade. So we got some interesting times ahead for crypto, all along the board. This, we might not get what we want right now, but it's going to happen. So definitely using fact-based structure will help you to remove those emotions, and if anything, help you to kind of standardize your risk management and your size management. So wishing all of you a healthy and prosperous 2024. Cheers.